Welcome to the Tradies in Business podcast. Join your host, Nicole Cox, as she dives into the real stories, tips, secrets, and stuff-ups from guests both inside and outside the trade world. Nick is here to help you break free from the grind, reduce money stress, and build a trade business that truly works for you. So grab a brew, put your phone on silent, and get ready to be inspired.
Alrighty, listeners, welcome back. I'm a bit excited today because I'm joined by the only accountants who might actually be more fun at a barbecue than your sparky mate after 2 beers. Dan and Tim from Two Drunk Accountants are here to chat all things business structure and why getting it wrong could cost more than just a tax bill. Dan and Tim, thank you so much for joining me here today.
Hey, Nick. Thanks for having us.
Thank you for having us. Excited to be back on the podcast. It's been, like a couple of years probably since we were on the podcast?
Definitely. Yeah. But it feels like yesterday, you know? It feels fresh.
Maybe for you and I, Tim, it feels a bit more like yesterday than for Dan and myself. Dan has just returned from a nice long holiday.
Yeah, it was nice. I was in Italy for 5 weeks and no idea what happened back here in the business. Tim handled that stuff. I mean, I don't get involved too much there. But no, had a great time. It was good. I'm refreshed and ready. You might hear it in our voices as we go along.
Yeah, Dan's looking fresh. I'm over here. I've got literal stitches in my forehead. I'm a wounded man. The stress has come out as lumps under my skin. It's good to have you back, Dan. I can share some of the stress with you.
Yeah, it's good to be back.
Good to have you back, Dan. Now, I thought I'd borrow from your show today in the hope that we'd encourage a bunch of listeners to pop on over and check out the Two Drunk Accountants podcast. And you guys start off with your one thing, which I just love this concept. It's almost like a personal sharing. It's a great way to connect with the people behind the mics because, okay, you're accountants and we like to know that sometimes accountants do fun things and
sometimes
we can strip away some of the stereotypical rubbish that's out there in the community. Yeah. And so, Tim, I believe you might have a one thing you can get us started on.
I do. I want to just, get the ball rolling on the one things this week. And so my one thing is a little incident I want to call Ratgate. So in the vein of Watergate, yes, but we're calling it Ratgate here in the Cat's accountant's office, the Two Drunk Accountant's office.
Yep.
So Dan's returned from his lovely trip to Europe, and we've been all flat out. And Dan has this little habit. He comes in the office, he grabs a couple of Weet-Bix, puts them in the bowl, and he'll munch away on his Weet-Bix. Anyway, day one comes, he's done his normal Weet-Bix thing, and then later that day he's realized those are rat poops around the Weet-Bix box that I ate my Weet-Bix from this morning. And he's investigated further and found a very large hole in the back of the Weet-Bix box.
Oh, no.
So that was the first part of the story.
Yeah.
And Dan was quite upset because there were some rat droppings there for a few weeks, I've got to say.
Yeah.
There were. And I was the only one probably tall enough to see them on that top shelf.
Yeah.
But by the time Dan got back, they were on the normal kitchen bench too, and nothing had been done. So Dan was a bit upset.
Yeah, I think irate is a word that gets thrown around a lot. There's a reason Tim's got stitches now.
Yeah.
It's all coming together now. I can see.
I was
in the bees.
hunting the rat. That's what. But so look, we all saw that was the end of Ratgate, but no, there was another chapter. It's never the end when it comes to Ratgate. So the team here, we all banded together. We put out some bait and some traps, and the bait all got eaten. So this is great. We're all feeling very positive about this. Dan comes back to work the next week, and there's rat poo all over his desk, which is on the next level upstairs.
Oh, no.
And the rats followed him.
Here's the worst part about this. I think that inadvertently we've given this rat a taste for Weet-Bix because I'd eaten the Weet-Bix up at my desk and there was an empty bowl which had once Weet-Bix in it. So it was a dirty empty bowl, but it was empty. And it had come only to my desk, had pooed all over my desk. And in that same office, there was another desk where someone in the team, I won't mention names, her name's Sarah, she had left an open muesli bar, half eaten, just open on the desk, and yet mine was the one that was targeted. So
I love that.
Yeah,
So good.
it was it was gross, and
It's made me laugh a lot.
I'm still getting over it.
Yeah. I just couldn't believe the rat hunted out your desk with the empty bowl of Wheat Bix. It's obviously all sticky and dry.
Yeah.
Oh, that's just the best.
Yeah.
It's just the best. So
I think what really got me is I got back from my 5 weeks in Europe, and there's just rat stuff everywhere, and no one's done anything about it.
They were too
I've
busy.
been so busy.
Yeah.
Yeah.
Anyway.
I don't eat the Wheat Bix.
Oh my goodness, that is a cracking story.
Yeah.
I know what my one thing is, and it's got a fair bit to do with rats.
Oh,
Not as exciting as that, though.
So we've all got rat issues.
Yeah.
Is that...
So what's your?
No. My very exciting one thing is I've never eaten anything that was anywhere near rat poo. I feel
Well,
really,
neither had I.
really excited.
Yeah. Neither had I. And a little known fact about me is I'm a rather big hypochondriac when it comes to these types of things. And I've chosen to just ignore it. It never happened in my mind.
You didn't Google it?
No, I didn't want to know about it. I've moved on.
Did you end up with an upset stomach just thinking about it? Because mine's a bit queasy just thinking of it.
Yeah. Listen, I probably did, but again, I just chose to ignore it.
This is like a cockroach situation where they're actually cleaner than we think,
No.
and we're the dirty ones.
This is a filthy rat that
rats-
half my week.
Rats.
And then I ate some.
I think if you Google it, rats are well-known carriers of disease, right, Dad? Yeah.
Exactly.
Yeah.
Shut up. Let's not talk about it.
Much less what their teeth do when you think about where their teeth have been before your Wheat Bix packet.
No, we don't need to worry about it. Nick, let's move on. Nick, what's your one thing?
Do you have a different one thing than Ratgate, or are you?
My thing my one thing is unrelated.
He's just called it his rat thing.
Yeah.
You're turning into a rat.
Well, my one thing was going to be rat bait. It's good stuff. Works quick. I did come in the office this morning. I can't see any rat poo. So,
good.
Hooray for that.
It's so gross.
So good.
Yeah.
So good.
Anyway.
Wow. I was looking before the episode to see when this drops. And for our listeners, we're recording a long time before this actually drops. In fact, we're all wearing sleeves, and by the time it drops, it's going to be really warm.
Oh, really?
In advance, I've realised we are.
Wow.
I was thinking I'm going to steal this thing that you guys do because it's a really great idea. And I was thinking my one thing is we're just a couple of weeks out from conference. We do conference every year for our tradie printers. This year we're going to Hobart, so we'll probably be back into jumpers. And no doubt there's some rats down there because, it's been cold a really long time. They're looking for food and warmth coming inside.
True.
But I'm really excited for conference this year. We get away for 4 days with our clients. We have dinners, awards, we do social activities, and a couple of full days of learning. It's lots and lots of fun.
Yeah.
Very different to any of the conferences I ever went to in my corporate life, which were boring. Until you got to that, it was either first night or last night fever.
Yeah.
100%. So we have a few of those. I won't share their names. So we have had a few occasions we've had to put buckets next to the people at conference on day 2 because night on day 1.
Oh, that's brutal.
Trips out to get plenty of Powerade and some tissues and Panadol and all.
Well, I mean, there's some good wine and whiskey down in Hobart too, so you guys could be in trouble on day 2.
I think so. Good gin bars too. If I remember correctly, they're the number 1 gin provider in all of Australia. They've got more gin distilleries there than anywhere else.
I reckon you're right there. Yeah, I reckon there's got to be a lot distilleries. So, that sounds amazing. I mean, when you came on our podcast, Nick, you were talking about going to Fiji. Has that happened?
Yes, we did that too. Yeah.
So that's done.
It was incredible.
We got to start planning some of these Fiji and Hobart trips, Dan.
More of this onto our schedule.
We need conference for clients. You need to have a conference for clients every year. You get to travel. This is all fun.
We should have a 2 drunk conference.
Amazing. Yeah. Maybe we just need an invite.
Yeah. TOO drunk conference.
Oh, 2 drunk. Yes. Yeah, that's it.
Hilarious.
Yeah. Drunk con.
That's fantastic. All right, we are going to talk business structures today because it is one of the most common questions I get asked all the time. And I have a very simple answer when somebody asks me this question. The question is, what structure should I consider for my trade business? My answer is always, it depends. There's so many variables. There's no one answer that suits everybody. And so I think you're far more qualified to talk about this than I am. Because my answer, it depends, probably leaves people scratching their head and wondering where to from there. So I guess maybe the starting point for me would be, what do you see as the most common starting company or business structure that tradies go into?
Yeah. So I think, first of all, it depends is the same answer we give. So
Yeah,
I
you're right.
think, big tick there.
Thanks.
It does depend.
I think the most common one would be the one people try and start on this by themselves. They decide to become a subcontractor. It's really the first step a lot of tradies take, right? They've been an employee, they've done their apprenticeship or whatever it is, and then they're like, oh, I'll be a subby. And we were laughing about this on our podcast this week. Is the way people describe what entity structure there are, and often it's I'm an ABN is what people say. Yeah,
I'm an ABN.
I'm
Yeah.
an ABN.
Yeah.
Which means you're a sole trader, basically. Is the actual entity structure that you are, and that would be the most common that people would start with.
Yeah.
Whether or not it's the correct one for you to start with, or we can get into that.
Yeah.
But I would say people just starting, they usually just get an ABN offline and off they go.
Yeah. Super common. You're right.
Yeah.
That's my experience as well. What's the risk, though, or the potential risk to staying a sole trader? Because that's the next conversation that we often have is, I've been a sole trader for the last 5 years. What do I do now? Should I just stay the same? Is there a risk at staying as a sole trader?
Well, I think there is, yes. The risks are probably mainly asset protection. So, as a sole trader in business, your personal assets and your business are all in the same big bucket, basically. So, if something goes wrong, there's not a lot of options there for protection. That's number one risk. Number two risk is there is a tax risk as well. And if your business is doing well, you can very quickly be paying more tax than you should as a sole trader. And it's not that it's a different tax system altogether, but it gives you more flexibility, more control to plan when you're going to be paying the tax as, say, a company versus being a sole trader. So to me, those are probably the two big risks. And then, not to mention, and it's okay to start out as a sole trader. You don't know none of us have a crystal ball. So we don't know where we're going to head. But for some types of tradies, like a builder who needs homeowner's warranty, moving from a sole trader into a company can be quite a complex task. So, so therefore, yeah, there's perhaps another risk of starting out as a sole trader or just being a sole trader. Changing later could be quite costly and complex.
Yeah, that's such a good point. The amount of businesses we've seen, and especially I think they may have changed some of the homeowners warranty rules several years ago, where it was harder to use equity in your home, for instance, as a guarantee and all these things. Just meant people got stuck between two entities, that being sole trader and a company. And while they're trying to transition across, they kind of get. So yeah, forward planning is a big part of it.
Yeah, for sure.
It does get messy. We've had a few clients transition through that process, and it's different in every state. In Queensland, the rules are very different to everywhere else. Victoria is a bit different again. But getting stuck in that dual situation is an absolute nightmare. It is
terrible,
a messy process to work through. It's never without its problems. It's certainly not easy to get to the other side. Is there a benefit, though, for most subbies, as you call them? I think that's a really good explanation for those listening. Is there a benefit to starting out that way?
Yeah, it's simple and cheap. I think the biggest benefit about being a sole trader is because there is no legal difference between you and your business. You are the same thing, the same bucket, as Tim was describing. It makes the compliance around it quite easy. If there's money in the bank account, you can take that. There's a tax consequence to that. So you're not having to track every dollar coming in and out of that bank account for personal use. You're just having to track your business's income and expenses, and you pay tax on the profit. It's easy, and it's also easy to register. You just go online and register for an ABN. It's not hard. So I think its simplicity is by far the biggest strength of being a sole trader, especially when you're starting out. And as Tim said, we don't have a crystal ball. You don't know where you're going to end up. You don't know if you're going to get 2 jobs or 25 million jobs. And so start simple and progress is a path most people tend to follow.
Yeah, unless you know that going it alone and being a business is certainly your long-term plan.
Yeah.
And that regardless of what happens in the next 2 years, you're going to be still running your own business in 10 years' time. Then it's sort of like, well, it's really a no-brainer. And if you're starting out without the resources to pay a setup fee for, say, a company, which is probably $2,000 or less,
Yeah.
I'd be questioning if you had enough resources to just start a business.
Yeah.
So yeah, I think, the perfect scenario for a sole trader is just a subby, and they're always going to be a subby or go back into employment sometime soon. It would make no sense to set up a company or a trust, something like that.
Exactly. And I think that's the question to ask. Am I a subby or am I a business?
A great question.
Yeah, and a lot of people might be confused by that, but like, am I just really an employee somewhere and I'm just doing some labor, or am I building a business which is an asset onto its own?
It's a big concept that I find that most tradies in particular, because their whole identity is wrapped up in what they do for work.
Yeah.
And so that's a big shift that they need to make to be able to see the possibilities of what might come next.
True.
What I often find, and listening to you, it triggered for me, is a lot of bad habits creep in. Unfortunately, when we're in that sole trader space, because it is a more relaxed style of business organization to run. And so beating those bad habits out of business owners as they graduate into other business structures can be super, super challenging.
Yeah.
So I would suggest, if you're listening and you've just stepped out as a sole trader, or even if you are, through a period of time as a sole trader, consider some good financial habits so that you're not falling into those traps as you move forward into your next structure.
So some easy tips. Just have a separate bank account for your business. Just at a bare minimum one. And pay yourself a regular amount. It's not a real wage, but just figure out what you need to live off and pay that to yourself weekly. And then if there happens to be profit, we'll take a profit distribution at some point, but try and act as if it's not just all one bank account.
Yeah, exactly. Yeah, I think I was going to say personal budget, which is what you said. Figure out what you need to live off. And because you do see it all the time, particularly with sole traders, it's like a daily drawing of $200. They don't even know they're really doing it, to be honest. The worst one you see is in the local club or pub.
This is an ATM, $200.
The ATM withdrawal.
$400.
Somebody's got to make it a nightmare come tax time for them too, to try and backtrack.
Yeah, no, like accounting cost saving tip. Just be neat and tidy and regular.
Yeah, absolutely.
Avoid the rat poo in your business.
Exactly. Let's clean up the rat poo. I really stand by that.
All right. Thinking about the natural progression then of most tradies when they start out as a sole trader, many of them then bring a partner or their family into the business. What kind of effect could that have on a business structure?
Yeah, big question. And again, I think it comes down to what your future goal is.
Yeah, I mean, you just made me think of the partnership, actually. And it's not my favorite entity type, to be honest. I've got to say, I don't love seeing clients in a partnership because
it's just a sole trader with more than one person.
That's right, which doubles down the risk, really. I mean, well, now there's two people's assets at risk, or there's two people in the business who could do something wrong, and the other partner's assets are at risk from the mistake that one partner's made if they have no assets, because you're joint and severally liable as a partnership.
That's right.
There's still not that much tax effectiveness. Yes, you're splitting it in half, but in my experience, like, it's a husband and wife. A lot of the time, that's not really a compliant arrangement anyway, because the ATO want to see that both partners are having equal input in the operation of the business. Usually, it's the husband or the wife running the business, doing all the hard yards, and the other person's doing a little bit of back office stuff. So, for me anyway, a partnership. And I cringe.
A way around that anyway, because it's not flexible, right? You are set in whatever the partnership arrangement is to begin with, 50-50 normally for like husband and wife situation. But if you do have a spouse or someone doing some admin in your business, you could also just pay them a wage.
Yeah, exactly.
And the same result, the exact same result.
Exactly.
Just a bit of super you'd have to pay.
Yep.
Which is a good thing, because most of us aren't paying our super anyway. That's the other half of it.
Yeah, it's a good forced saving for retirement. Yeah, there for a reason.
So let's let's just skip partnership because we can all agree.
Yeah. Pretty much. Like if I'm seeing someone with a
Yeah.
partnership, I'm going to have a pretty strong conversation with them. Like we need to consider changing this because, it's not achieving what they think it's achieving. Yeah, generally.
Okay. So talking about partnership then and comparing it to like a company structure, what's the biggest difference between the two?
Yep. So a partnership, as I said before, is essentially just a sole trader with more than one person. So it isn't a separate legal entity to you and your business. Its assets and its liabilities are your assets and your liabilities. The trick with a partnership is as well is that there's more than one of you, but you also aren't split in the assets and liabilities anyway. So if the business has a huge debt and it needs to be paid, it's not that 50% of it comes from you and 50% of it comes from the partner in your business. You might all have to pay the entire debt yourself just because you're the one with the assets.
Yeah.
So it's risky in that way, especially if they're unrelated parties in that business. But it's essentially just you have an ABN with someone else. That's all a partnership is.
Whereas a company, you can create a more legally sound partnership because there is a formal legal document. There are formal roles like shareholder, director. So shareholders are, in essence, the owners of the business. And that's how you can come up with your ownership split.
Yep.
So in a partnership, you can have a percentage of ownership. In a company, you work that out by issuing a certain number of shares.
Yep.
So Dan and I could own 50 shares each. And then if one of the partners is going to be more silent or just an investor, they aren't carrying more risk because they don't have to be a director.
Yep.
Which is the person in the company that's responsible for signing off on things, running the business, and making sure that the shareholders are being looked after, basically. So it's much more formal, a much more legally structured way of having a partnership. And it achieves, your asset protection because it's I often say it's the easiest way of having a child is to create a company. It's like its own person, basically. And it'll talk back to you a bit less as well.
I don't know about that. Depends on those bad habits that we talked about.
Yeah, well, that's true.
Exactly. You can also decide whether or not to pay out a profit distribution. Like in a partnership, your partner's automatically is entitled to whatever their portion is, 50% of the assets of the business. In a company, if you're the one doing all the work, well, you can take a wage, which you get paid for, and you get taxed on just like you were an employee anywhere else. But then the business can decide whether or not to pay out a profit distribution to the shareholders, in which case, it's the profit from the business that's being shared after the active person's entitlement wage.
Yeah. And like, not to mention, and Dan and I have done podcasts on this and webinars on this about franking credits and how we like to call them sexy.
Yeah. Very much so.
It's sexy voodoo magic, basically. And not a lot of not a lot of people understand how franking credits work, but basically it's awesome because it's a tax credit that you're getting for your company when it pays tax. And you can take money out of your company later and have a portion of tax prepaid on that money. Whereas as a sole trader or partnership, you guys pay tax
in the year.
It's gone. You're not getting, the ATO is not tracking how much tax you've paid over the years. Wouldn't that be great? Slash disgusting to look back at our lifetimes, how much tax we've paid as individuals. But in a company, that's what your franking credits are. And so every year your company pays, let's say 20 grand in tax. After 10 years, if you haven't taken any dividends, that's $200,000 of franking credits that can be attached to profit and paid out. And in some cases, you may get refunds from those franking credits when they're attached to dividends, depending on your income. So it's pretty powerful.
Very much.
Very sexy indeed. Credits are right up the top for me of the reasons why a company should be considered, because I just feel as though it sounds complicated, right? We're all quite used to talking about these concepts on a day-to-day basis. But for a tradie, a man in a van who's never thought about long-term and what their vision might be, this sounds really complicated, but it's not. That's why we have the professionals in place to talk us through what it looks like. I think one of the other biggest benefits that we don't necessarily understand from a trade business level is asset protection. Can we talk about what that means in real people terms and how it can protect them moving forward?
Yeah.
Yeah. So let's say you have a business in a company set up. You're the shareholder and the director of that company. If you were a sole trader or a partnership and you had that same business and something goes wrong, your business is sued and your insurance doesn't cover all of it, there's an accident, whatever it happens to be, you are liable for a large amount of money. Or you're just insolvent and you've got to liquidate, whatever it happens to be.
That's potentially the more likely.
Yeah.
Yeah. Unfortunately.
Yeah. You didn't pay all your ATO debt and you've gone under.
Mm-hmm.
If you're one of those other entities, like a sole trader or partnership, your personal assets can be used to repay that business's debts. So your home, your investments, whatever it happens to be, which is a huge risk.
Yeah.
In a company, because it is a separate legal entity, it's a baby onto its own. It is liable for those debts. As long as you as a director, and it's as a director, not a shareholder, but you as a director haven't done anything illegal or against what they call the director duties, which is usually when you knew you were insolvent, you didn't keep trading. You've lodged all your tax returns. Even if you haven't paid them, you've lodged them on time. And you have paid your super to your employees or lodged the late forms if you didn't.
Yeah.
They're the three big ones. If as long as you've done those things, you personally aren't liable for those debts. The company goes into liquidation. It gets closed down and you move on with your life. Whereas the other option, you might have to sell all your assets or go personally bankrupt, which is a bigger problem.
Yeah. No, you're right, Dan. And like that does sound overly simplified, but it is that simple.
Yeah.
And it's not a silver bullet. It's not a guarantee that you'll be able to shut down your business and walk away from a lot of debts and definitely not sell your house. Let's say that. But it certainly builds in protection.
Yep.
It certainly gives you the option of not having to do that. And the other thing I like to remind people is if your company goes bankrupt, that's not necessarily you individually going bankrupt either. So isn't that a nice option to have, that you might not have to go bankrupt personally and have that black mark against your name?
Yeah.
Whereas as a sole trader, unfortunately, there is no option there for that because the business is you. It's your own legal entity. So
so it's a big risk if you're going to have a business of a certain size in a sole trader or partnership for that reason.
Not to mention the small business restructure that the ATO has brought in,
which is only for companies.
Yeah. So sole traders don't have access to the small business restructure. Companies do.
Yeah.
Every 7 years you can do this. Yeah. It's actually pretty crazy. It got passed through very quickly during COVID. We had a liquidator on the podcast and he told us all about it. And
fascinating.
Yeah. And basically it's essentially a negotiating tool for small businesses to reduce their ATO debt, in some cases quite significantly, like up to 50 to 75%. If they can show that the business was operating a certain way and they've changed it and that moving forward it's going to operate in a much better way. So it's amazing. It's a low cost from a liquidator perspective because they cost a lot of money too, liquidators generally. They're the only ones that walk away with something when a business goes bankrupt, unfortunately. But I mean, having that option up your sleeve is pretty amazing because this could be totally unforeseen. Like this could be a mistake of a team member that's created a legal suit, lost contracts. This could be a bad debt. You could be doing...
One of your biggest customers has gone under and you've done a lot of work for them. You've outlaid a lot of costs for that person and all of a sudden you no longer have the cash to pay your tax bill, your super, whatever it is that's come up.
Exactly. Like, you do see the slow burn. Obviously, the business wasn't going well for 5 years and then the ATO debt builds up, unpaid super builds up. Okay, fair enough. They're going for liquidation. But but sometimes it's unforeseen, and it's nice to have that ace up your sleeve of a small business restructure, or just to shut the company down when that worst case scenario happens. So
I think it's important, and it's another one of those things that we don't often do when we first start out in business is consider where it could go. We want to look at the fun stuff, but we don't necessarily consider that. But for the grace of God, anyone can end up in a dreadful position, unfortunately, very quickly and very easily. And you may have planned a very different outcome, but if we don't have that kind of protection available to us, unfortunately, it's everything gone. It's not, there's not a way out. There's no lifeline to try and help you through that situation. It's just all said and done, which is just dreadful for a family.
Yeah, exactly.
Definitely.
But so much more dreadful if you end up having to sell your family home and go personally bankrupt as
Absolutely.
well. Or in the case of the partnership, husband and wife,
Yep.
Yeah.
both of you going bankrupt,
Yeah.
which implies all sorts of limits on you. Like sometimes you got to give the creditor your passport. You can't leave the country.
Yeah.
If you earn over 70 grand or something about that, you still have to repay your debts.
Yeah.
Yeah.
And not to mention just going for credit checks.
Getting a loan. Yeah.
Yeah. So all of these things can be avoided.
Well, the funny thing is the solution to the positive, like thinking about all the grand things that could happen and thinking about all the negative things that could happen, are the same solution. Is that somewhere in your entity structure, we can get a bit more complex in a second, but should be a company somewhere
Yeah.
giving you some type of legal protection.
Yes, exactly.
Okay. When is it time for us to start to consider what kind of structure our company should be?
When you think about starting a business, is the first point.
Yep.
And you'd be asking yourself questions like, what am I trying to achieve here? Am I a subby? What's my income going to be? What does my life look like in 5 years? What does my life look like in 10 years? Because it's much easier to set these things up correctly from the start. So, for instance, a structure that we often set up for people would be you have an operating company that runs a business whose shares are owned by a family trust, whose beneficiaries include you, your spouse, and maybe a bucket company that holds investments for you into the future. Now, that's quite a complex and expensive entity structure to set up all at once. And you might not need all those parts right now, but you should be considering, well, what income level am I trying to shoot for? Is there a way to build to that point? Where should I start? Because it does get harder and harder to change structures, especially when trusts are involved, the bigger your business is.
Yeah, good point.
Who, this is going to be a really obvious question. I'm asking it for a reason. People are probably sitting there scratching their head and thinking, well, how do I make this decision? Who do I need to involve in that decision?
Your accountant?
Yeah, definitely your accountant. Yeah.
Would be someone to advise you, because I always think there's sort of two triggers for entity structuring, and we've spoken about both so far. It's risk and tax.
Yeah.
They're the two big ones. If you're a subby, sometimes it's the builder I work for told me I need to be a PTY LTD is the other way they say it.
Yeah, you've got it. I'm an ABN or I'm a PTY LTD.
Usually it's risk and tax. And your accountant is someone who can go through and say, all right, based on what you're describing to me and the business, the size it is and what you're hoping to achieve, here's what the best structure for your situation is going to be. And it might be just go be a sole trader. It might be all you need is a company and it's going to be owned by you and your spouse. Or it might be, you know what, your business is going to be big enough where let's start talking about trusts. Let's start talking about those more complex structures.
Yeah, it often comes down to like, well, what capacity do you have to invest in this at this stage? And often it's not a lot, which is fair enough. And they might not be that certain about what the future looks like. Also fair enough.
Yeah.
So it's like, okay, well, start off this way.
Yeah.
Let's catch up again in
12 months,
6 months, see how things are going. Hopefully they're going really well. And then that's when we'll pull the trigger and make some changes.
Yep.
And just so you know, though, like you're going to set up insurance, you're going to set up bank accounts, you're going to purchase assets.
Yep.
You're going to set up a zero file, ATO registrations, all over here as a sole trader, as an ABN. You're going to need to do that all over again when you change to a company later. So not to mention specific things like homeowner's warranty.
Yeah.
So generally when you start to say things like that, they're like, no, actually, yeah, we need to do this right now.
Exactly.
But yeah.
Sorry. No two accountants are the same though. And I don't know how many times I'm told by a tradie, but my accountant didn't ask. And so I think it would be really helpful for those listening, firstly, to understand that not all accountants are going to be proactive in asking you these questions. Sometimes you need to take the information to them.
Yep,
what
true.
kind of points of information should they take to their accountant if they're considering going into business? What do they need to tell them?
Yeah, I
Great
think
point.
you should have an understanding of what your goals are. What do you want the business to look like? If you go up and say, hey, I'm going to start a business. I currently work for this guy. He said that I should go out and be a subby. So yeah, I'd like to know what I want to do. Like, what structure should I be? Just based on that pure information, you'd say just go get an ABN. You know, if that's what you're going to be. But if really in the back of your mind, your goal is, oh, but this is just the start. I'm going to do some work for him, but then I've got 3 other builders lined up that I'm going to work for, and I want to get 2 vans under my name going soon, and all that stuff. Well, that's going to change the answer completely. So really know what it is that you think you want. And if you don't know what you want, ask them, how do I figure that out?
Yeah.
How much do I need to earn? I have an idea of what I can get, but all right, well, this is what I want personally. I want to buy an investment property in the next couple of years, and I wouldn't mind putting money aside for my kids, whatever it happens to be. You're like, okay, well, we can now start here, work our way up and tell you, well, your sales need to be this. That's a pretty big company. That's a big business now.
Yeah, sure.
That needs this kind of structure.
Yeah, for sure. I think that's right. I mean, it's just having the conversation with your accountant and not doing it via a quick email or a quick 5-minute call. Like, that's just not going to cut it, unfortunately.
Yeah.
And this is where often, it's the frustration between clients and accountants. The accountant wants to help, but they also, all they have to sell is their time. So I think you've got to be willing to invest in spending some time with your accountant. And that's going to feel a bit weird because you're like, oh, I'm paying, whatever it is, a couple $100 just to sit down with them. And I might not even need this. I don't really need this. But it takes time to build the context, build the understanding of each other for the accountant to then pull out of their bag of tricks, things that are going to help you.
Yeah.
So I do think the best clients I work with are willing to invest for my time and knowledge and experience. And we're quite restrictive as well. Like, if people just want, a 10-minute call, I'm like, great, 10-minute call, but just so you know, like, you've got to be able to raise your question and me be able to answer it in 10 minutes or less.
Yeah.
Like, that's not very much.
Yeah. If you
I could talk about rats for 10 minutes.
I think we did.
If you're saying, oh, my accountant never asked me that, but you never got a meeting with them.
Yeah.
And you sent them a quick email saying, I need an ABN. Well, that's going to happen. I mean, your accountant might ask, why do you need an ABN? And then, you go from there. But that's not always going to be the case. If you're not going to invest in that time, it's a really good point.
Yeah.
You're not going to get the answers you actually need.
Yeah. Yeah. But also your accountant does need to be able to make time for you if you're asking for time.
Yeah.
It's a two-way street, but yeah.
I find, as tradies, we want to be paid for our expertise, just like you want to be paid for your expertise as an accountant.
Yeah.
And we want clients to invest in us to get the right outcome for their project. I don't know why this would be any different. And I have said so many times, paying for this advice early saves so much later on. Same for legal advice. I don't know how many times I've seen people wait too long because they're frightened of what it's going to cost. But then they make errors unknowingly and end up in a far worse position than if they had have taken that advice early on.
Definitely.
I think it's definitely worth investing as quickly as possible so that you know where you're headed.
Definitely.
And we're all working together on the same page.
Yeah, it's like anything. Preventative maintenance costs far less than repairs.
100%. Even traps and keeping them in the office so that
exactly.
end up with upset bellies.
If we invested in pest control, I wouldn't be in this problem that I'm in.
It's been a while.
Yeah,
actually. Now you mentioned that.
All right, Tense. Now, is there anything else we need to know about company structures? I know we've kind of broadly stepped around a couple, and we haven't spoken much about a few. But is there anything broadly that we might need to know?
Well, one thing I can think of, and this is particularly relevant for people who started as a sole trader or partnership and then have moved into a company structure. The way you get money out of your business is very different. And if you keep going on the way you always had, you might end up with a very bad tax situation on your hands.
Yeah.
So what I mean by that is when you're a company, because it is a separate legal entity of its own, its money belongs to it. So any profit that it makes isn't yours. It belongs to the company. You can't just transfer that money into your bank account and go slap it on the pokies. It needs to be a wage. And if it's not a wage, it needs to be a dividend. But either way, any money or anything personal the company pays on your behalf is income in your name, and you will pay full tax on top of that amount. So just remember, you need to build those good habits that you were talking about earlier. About how you get money out and how regular that is.
There's no such thing as director fees.
Director loans aren't real. Well, they are, but they're bad.
Everyone's like, oh, just pay director fees, isn't it?
Yeah. I've been told to take director fees when I'm a PTY or TD.
Director fees are just wages that are called director fees.
Yeah.
It's the same thing. You
Yeah.
pay tax on them, exactly the same.
And super.
Yeah.
Yeah.
Super. No, great point, Dan. You don't want to end up with director loans or shareholder loans that you owe back to your company. It does happen a lot, but it's complicated when that happens. So
No excuse for ignorance, right?
No, exactly.
yeah, that's right.
If you're audited by the ATO, my accountant didn't tell me, won't cut it. Your director duties would say you should have known.
That's right. We're deemed to know. That's
Yep.
up to us to educate ourselves or ask the right questions.
Yep.
Gosh, I can think of a few conversations with clients over the years where I'm trying to explain it to them and they are just not listening because they don't want to know about it. So that's a thing too.
Totally. Anything else we need to know, gents?
Well, we didn't discuss trusts.
No.
But interestingly enough, like it's probably not the go-to for operations or trading entity. You can, but the hard thing with trusts are there's no retained profits, so the income has to go to someone. So like that could be you, your spouse. It can be your kids as well, which is cool. But they've got to be 18 or over, and they've got to be given the money. So. There's a bit of a catch there.
Never used to be that way, though, did it?
No. Yeah, not as much.
Like the rules.
They've definitely tightened the rules.
No, they didn't tighten the rules. They tightened their
compliance activity.
Yeah.
Like I suppose when I went to uni, the story, the fearful story was, oh well, if the kid's been distributed 200 grand over the years, they can go ask for a check from the trust. They're like, I want my money now.
Yeah.
So that was the main risk back in the day. Now the risk is if you don't give the kids the money or economic benefit from the trust distribution, so like paying for things that parents wouldn't ordinarily pay for.
Yep.
Then the ATO can say, well, no, that income all goes to you instead of your kids. So but yeah, trusts already, like just by talking about this stuff, you can tell they're more complex. They're more complex.
Yeah.
They can have massive tax advantages.
Yeah. And we alluded to before some type of hybrid structure as well, where you're a company owned by a trust and there's another company involved. It can get quite complicated, but keeping it simple, thinking about what entity you're operating from. Rarely would you operate from a trust. I have a few clients that are tradies that operate from a trust, but there's specific reasons why they would be like that.
Yeah. Yeah. So the trust is something worth considering, and it's probably a good add-on to your main trading entity, which is probably a company.
Yep.
Yeah. So that's worth noting, I think.
Well, I can't say that was boring. It's always the risk when you're talking to an accountant, right? That just the money stuff, people get uncomfortable with it and they decided that's boredom. I don't think it's boredom. I just think that we get uncomfortable around money and we find it really challenging to have those conversations because it's quite emotional. And there's a lot of triggers in there. But I feel like today we've done a really good job of just talking briefly over the opportunities available to you as a trade business owner so that you can plan for a very bright future, but also protect yourself in case something dreadful does go wrong.
Yeah, that's important.
Yeah, totally. I would absolutely encourage you to reach out to your accountant if you have one, or if it's time to make a change. Gentlemen, where do our people find you?
Great question. You should find either our podcast, Two Drunk Podcast, anywhere you find podcasts or online. But if you want to reach out to our accounting firm, that's Cats Accountants, like the animal cats, CATS accountants. Just Google it. We pop up. You can get in touch with us and we can see if we can help in any way. But otherwise, definitely tune into the podcast. We talk all things tax and business.
Yeah.
And contrary to popular belief, even my own, they don't get drunk on the podcast. So don't go over there expecting to have all that kind of fun because it just doesn't happen.
There are some episodes.
Yeah.
We found the content wasn't as good, unfortunately.
The advice definitely went away and the banter was mostly what was there.
Yeah, they go about twice as long and there's a lot of dribble. When we listen back, like, what were we even talking about? But,
Usually when there's a conference, actually, we
there you go.
record together quite drunk.
Yes.
Well, thank you both very much for joining me again on the show. It is always wonderful to chat with you. I'll drop all of those links into the show notes, which is below this episode. All you need to do is scroll up on whatever application you're using. You'll be able to find links to both. I've got to ask one cheeky question before we go. Why cats?
Yeah.
Great question.
We get asked that a lot. It's a business that my parents started actually. In the 90s, and accounting used to be done in books, and
Yeah.
so they called the business Computer Accounting Taxation Services.
Love it.
And yeah, it's sort of like cloud accounting, I guess. The computers were the rage at one point in time.
We dabbled with different acronyms. Yeah, like cloud accounting, taxation services, hair.
It's just a bit of a mouthful.
Yeah.
So it got shortened to cats. It's not that we're obsessed with felines or anything like that, but
Yeah, ironically, I'm allergic to cats. So
Well, there's your problem. This is why we have rats.
yeah,
we need more cats around here.
Enemies. Yeah.
Thank you both. I really appreciate it.
Yeah.
Thanks for having
No
us.
worries. Thank you.
You've been listening to Tradies in Business podcast with Nicole Cox. Find out more about today's guest, tools for your trade business, and other cool stuff at tradiesinbusiness.com.au.